It's time for the Your Personal Bank Show with Ferenc Toth, president and founder of Secure Estate Management. Take charge of your financial future with your personal bank. Now, here's Ferenc Toth.
Welcome to Your Personal Bank Show. Today we're going to cover a lot of information. There's been an article that's come out that I think is, well, very, very eye-opening, and I just want to really touch on that, talking about obviously what's going on with the coronavirus, with the economic situation, what the expectations are, that type of thing. One thing I've been talking, if you listen to the last couple of weeks or so, is I've been talking a lot about common sense and exercising caution. And really I think that thought process is going to continue, because the bottom line is we're in very uncertain and very unprecedented times. And it's that uncertainty. The reality is no one really knows what's going to happen. And I've quoted this. I've said this now for a couple of weeks. So Warren Buffett, the Oracle of Omaha, in his recent stockholders meeting stated, I don't think anybody knows what's going to happen today, tomorrow, next week, next month, or next year. There's probably not many folks in this world that have more experience in investing and such than Warren Buffett. And I think that's a very credible source to think about in terms of when somebody like that is uncertain about the future, that should be considered, strongly considered. And one of the things that's come out recently is, we had an interview, and if you go back to yourpersonalbank.com, you can listen to it. I interviewed John Burley on April 28th in terms of what about real estate? What did he anticipate? He's one of the top real estate experts in the country in terms of what he expected real estate to do with this financial crisis, how it should react. And, as one of his statements was, the real estate market usually moves slower, but typically echoes the Wall Street stock market. So expect some reductions in value and things like that, because the biggest thing that's impacting and concerning real estate folks buyers and sellers really is the unemployment, the historic unemployment numbers. We've had a tremendous amount of employment, and in fact, I've got a point here that for example, Weiss Analytics has stated that 30% of homes priced at $200K or less have been listed at a discount of over 6%. And the homes, 37% of homes, 600K or above, have been at a discount. Over 7% of them already are listed. So we're already starting to see some movement in that area in terms of reductions in the list price, or what people are asking for their properties. We're going to see how that plays out over time. The other thing I want to point out too that's kind of become news, and it's kind of real estate related, obviously, and it's the lending industry, the banking industry. I have a lot of contacts in that area and friends and such, and have had some experiences recently with some clients who were in the midst of trying to get refis on their homes. And, with the interest rates, Fed dropping rates, they feel like it was a good time to try to get a lower rate and those kinds of things, and have had some cases where they've declined them now. These are folks with some good credit, historically would have qualified for a loan. And what's happening is this historic unemployment, and I've seen some articles on this, but again, just talking to people in the banking industry and lenders that I know, mortgage brokers, various folks like that, is that the lending industry, the banking industry, is kind of spooked by this historic unemployment numbers. The banking industry is risk adverse, as most of us are well aware of. And that industry is spooked by the unemployment because they're concerned about, putting out a 30-year fixed mortgage, for example, or any mortgage for that matter right now, in an uncertain environment. And that's, I guess, the theme of what I'm going to share with you is it's that uncertainty that's creating the challenge or the problem and the concern that again, the banking, the lending industry has, the economists are talking about. And what's interesting, we're going to touch on this some more, why the stock market, for example, seems to have this dichotomy right now of the overall trends of what's going on. One industry is saying, hey, we're concerned. The other doesn't seem to be showing that same concern. There seems to be a dichotomy, if you will. Again, when you're talking about your money, your retirement, your future, whether you're living off of that income now or plan to do so at some point in the future, these are things that should be of concern to you. Obviously, no one has the answer right now, and I'm not going to sit here and try to tell you that I do either. But what I think is abundantly clear is there's a significant amount of uncertainty in terms of what is really going to happen. And that's where the problem lies. Again, this isn't a financial crisis per se. It's a medical crisis that's spilling over into the financial world with the shutdowns and all the things that have happened as a result. How is all this going to play out? And of course, all the money that the stimulus packages and stuff, how is this going to play out, not only in the short term, but then intermediate and longer term? And those are answers to questions that, unfortunately, no one really has, because as this article talks about, I'm going to touch on here in a minute, this time really is different. And so the thing is, you want to be cautious, exercise caution going forward. You know, I've talked a lot about recently the 3-bucket strategy. That's where you have your emergency bucket, your your medium-term bucket, your interest or cash flow bucket, and then you have your long-term bucket. And again, I've talked a lot about, you know, 6 to 12 months is typically recommended in terms of the emergency bucket. That's for emergencies. That mid-range interest income bucket, that's, you know, 1 to 5 years typically. I've seen 7. It's enough money in there that you can live on for that amount of time. Okay, something that's relatively safe, generate income or interest that you could live on for that period. And of course, the growth bucket, which is, of course, your growth-oriented assets, which, you know, have been volatile recently. And that's where a lot of the uncertainty lies, particularly in that growth bucket. Okay? And a lot of people talk to me, why do you talk so much about the safer side of things? Well, this comes from personal experience. Those of you who have been listening know this is my 23rd year in the financial industry. I've had, I'm approaching 30 years as an entrepreneur with a number of different businesses. I've owned a retail business, a contracting company. Let's see, of course, last 16 years, a financial services agency. Okay. I've owned a real estate investment company for a number of years. So as an entrepreneur, as a business owner, I've had to deal with these economic cycles and these crises that occurred. We lived through 0809, for example. I was both in the financial and real estate worlds at that time as an entrepreneur in both of those areas in Phoenix, which could have been, particularly for real estate, kind of the eye of the storm. We got hit as hard or harder than just about any market in the country. Maybe Vegas is the only one that got hit even further in that particular crisis. We survived that. And that's one of the thoughts that I share with people is understand, I'm an optimist by nature. You know, those that know me, those that work with me know I'm a pretty upbeat guy. I'm an optimist. But I'm an optimist with some battle scars. And I thought about this the other day, and it was like, I've had some experiences. This isn't my first rodeo, as I like to say. This is actually my 4th economic cycle as an entrepreneur, 3rd as in the financial arena. So I've seen this, I've experienced it, I understand what it's like and what you need to do to not only survive these types of crises, but also how to thrive through these kinds of crises. And not everybody understands those because they don't have that experience, of course. That's a big part of it. I've often said, if you're listening to an advisor of any stripe, particularly in the financial world, and they haven't been in the business, they didn't survive the 0809, they weren't in business prior to that, how do they really know what it's like to survive or work through a downturn or down cycle? It's kind of interesting. You gain experience, or you gain knowledge, I should say, through experience. So again, I'm an optimist with battle scars. And some of those scars, I guess I'm proud of because as well anyone who's been through it should be. You learn very valuable lessons through those battles that you never forget. So it's not that it changed my outlook in terms of being bullish or optimistic about things. It tempered. I am optimistic about the long-term future of our our country and its economics and all that kind of stuff. But then you learn to not ignore facts, and that's what I'm trying to say. I'm trying to be cut through the noise, if you will. You know, get through this time it really is different. And this is this Harvard study I'm going to touch on, this interview. It's very interesting. You know what? We'll stay tuned and listen to in the next segment, because the normal pattern and the normal things that we've always done and we've been taught and we've been told and what works in normal economic cycles may not apply this time. Again, no one really knows, but you want to exercise caution. And that's why you want to pull back on some of those monies, some of your assets, some of your position, so that you can weather this in case some of these things happen. Stay tuned in the next segment. We're going to talk about this Harvard interview about why this time really is different.
For more information on your personal bank, call Ference at 866-515-6280 or online at yourpersonalbank.com. Back to Your Personal Bank Show with President and Founder of Secure Estate Management, Ference Toth.
Welcome back to Your Personal Bank Show. In the first segment, we just kind of talked about, starting to talk about some of the things why this time really is different and why you want to exercise caution and use some common sense. I've been sharing those thoughts a lot, and don't go all in or all out, if you will. Not time to go big or go home because of the uncertainty. There's just too much of it. Well, I've shared this many times. Warren Buffett recently stated nobody really knows. I don't think anybody knows really what's going to happen in the near or the long. He talked about next week, next month, next year. But I really want to touch on this Harvard's, actually, it's two Harvard professors, Carmen Reinhart and Kenneth Rogoff. And these two wrote a book. The name of the book is This Time is Different, 8 Centuries of Financial Folly. They wrote this in late 2009. And why this is so important is basically, and the premise of the book is they talked about it, reminded readers, that the catastrophic 08-09 credit crisis was far from unique. In fact, they became the go-to experts, and they pointed out this seemed to be part of a predictable pattern. So these two Harvard professors, economic professors, became known as very credible experts in this field. And what's interesting is very recently, in fact, they were just interviewed, I think a day or two ago. And this interview, I found, I don't find a lot of interviews educational or enlightening. I don't find that many times that the interviewer really asks probing or good questions. But this one, I have to admit, was done very well and shared a lot of really awesome information from, again, two very credible sources. And here's some of the highlights. We're going to post this on our website, yourpersonalbank.com, this interview. It's that good. I'm going to encourage you to check it out. Go to our website, check it out. You can read it, you can download it, pass it on to others. But this is one of those things that I believe is eye-opening enough. Again, my goal, as I always say with this, when I bring an article, I don't bring a lot of articles onto the show and stuff, but when I do, it's because I feel like it's one that's cut through the noise, if you know what I'm trying to say. A lot of them are fluff. A lot of them have agendas. But sometimes you run into one that actually shares a thought or two that makes sense. And this one shares a lot of information. Anyway, the bottom line is, again, these two Harvard economic experts wrote this book that really was eye-opening, became experts to a lot of countries and various things as economic experts. And they pointed out with that in the previous, they were talking about the 08-09 crisis. Their point was, look, it's part of a predictable pattern of economic ups and downs and cycles. And it became a very, very popular and well-regarded book. And they asked him about what about now? And their comment this time is, well, you know what? This time it really is different. And I thought that was interesting because early March in the show, I started sharing about how this time it felt different. Okay. And it's kind of this, I had to smile because I was like, I don't want to be right about that. You understand? In fact, I hope a lot of the stuff they're sharing in this article or this interview turns out to be not wrong. They repeatedly themselves state they're not sure. They don't know really what's going to happen, which again really comes to the crux of what I'm trying to share here is nobody really knows. So when you don't know what the future holds, what should you do? I mean, in terms of your money, let's say. Again, particularly on monies that you know you're going to need to rely on in the near or long-term future. Should you go big or go home? Or should you dial it in and protect that and be safer? Think about reallocating more of the funds of that safer bucket I talk about, that middle bucket, that interest crediting bucket, that interest or cash flow bucket. Your personal bank fits that bucket perfectly well for most people that I deal with. Of course, it's not for everybody, but it's certainly worth looking into. I think anyone, particularly these days, certainly should take a look at it, take a serious look at it, and we'd be happy to do that. Go to yourpersonalbank.com. And that's really what I want to help you do is look at your situation and see where you were. Look at what the situation is potentially going forward and how you can mitigate that risk. How can you ensure your income is going to be ongoing if you need it now or for retirement down the road. That's really my purpose and goal here, okay? And of course, that's how I make my living. And I don't shy away from that. It's if I bring something to somebody's table and help them understand how it's a good fit for them, if it is, again, then, I don't think anybody has a problem with that. In fact, they're usually appreciative because I'm able to educate them on something. Maybe it's a little different than what they've been told or heard previously. Again, if this time really is different, like these Harvard professors are talking about, this is critical to take a look at. Anyway, the point is, some of the things they talk about is, even point out right off the bat, I discussed this in early March. The International Monetary Fund was looking at the world economy back in April, stating that they predicted the world economy would shrink by about 3% this year. They're saying that situation has deteriorated since. So they're already predicting something worse. But the first question, one of the first questions the interviewer asked, which I thought was awesome, again, the premise of the book was that they wrote in 2009 was economic crisis and cycles are part of a predictable pattern. So the question was, is this time different? And like they point out, there's a lot of references to the 1918 influenza, but the problem is with that reference is we were at war at the time. And like they said, in 1918, GDP grew at 9% that year because of wartime production. So there's really no way to use that epidemic or that pandemic as an example to compare to from an economic standpoint. Okay, it's a huge difference. What is different, though, as they point out, is how sudden this has been. We talked about in 6 weeks, job unemployment has wiped out 60 months or 5 years of gains, and how the reversal in capital happened in 4 weeks, and it took a year in 2008-09 to accomplish the same kind of numbers. So what happened in literally would take a year from the Great Recession, this time took a month. So it's happened 10 times faster, if you will, than the previous Great Recession, as it became known as. Okay, and the other thing they talked about was this is the first time. This is something that anyone who's looking at their money and investing in the future really should need to consider. They're stating this is the first truly global crisis since the Great Depression. Now, what they mean by that, and they go on and explain, is 2008, of course, affected rich countries, but not the emerging markets so much. I said they had a good crisis, as they put it. This time, they don't think they're going to escape it. They don't think anybody's going to escape this one. So if this is truly the first global crisis we've experienced since the Great Depression, again, that would categorize us as, boy, this time it is different, okay? And then the other thing they pointed out was the policy response this time is certainly different. What the governments have done in terms of what in the crisis, what they've done in terms of stimulus, the Federal Reserve, and all the government, let's face it, the banks around the world have done. This is unprecedented. And the thing is, how is it going to affect the future? Well, one of the things they point out here in this article, or this interview, like I said, is they talk about, the average, I thought this was interesting, the average recovery period for a recession, any recessions since World War II, post-World War II, is about 4 years. They're saying that based on what's happened here, I'd say looking at it now, 5 years would seem like a good outcome. They're talking about a 5-year recovery. Now, they don't know. They stated that. They're not sure. They don't know. And I thought this was quite interesting. This is where I kind of really, really started paying attention. I thought the information prior to this was excellent. But they talked about, the interviewer asked, the recent stock market surge seems at odds with the state of the economy. And the answer was how much of the resilience, if not ebullience, in the market is policy driven. They think a lot of it. And they're going to they talk more about that. I'm going to touch on this more in the next segment in terms of what they think about the markets in this interview going forward and how it's going to impact your money. Stay tuned.
For more information on your personal bank, call Ference at 866-515-6280 or online at yourpersonalbank.com. Back to Your Personal Bank Show with President and Founder of Secure Estate Management, Ference Toth.
Welcome back to Your Personal Bank Show, and I've been talking a lot about in the last segment about this interview. I don't spend a lot of time on these interviews or articles. I like to touch on them or reference them sometimes, but it's rare I find one that really, I believe, gets into the crux of the matter, cuts through the noise, and it really gives some great information. And this interview, of course, they interviewed Carmen Reinhart and Kenneth Rogoff. They're Harvard economic professors who wrote a book in 2009 called This Time is Different, 8 Centuries of Financial Folly. And the premise of the book, and it was very well received, very highly regarded, and they became experts in their field as a result. And their point of the book was that the financial cycles, crises that occur are part of a normal cycle. And so the interviewer asked him, well, okay, that's great. Is this time different? And they pointed out several reasons why, and they agree that this time definitely is different. And it's different because, well, although pandemics occur, they don't occur often, of course, and we don't have a lot of precedents. The 1918 pandemic, they use it as an example. It was in the middle of a war, so our GDP actually went up. Wartime production still was going strong. So you can't use that as an example. Policy response is very different, of course, with what the Federal Reserve and governments around the world have done in terms of economic stimulus is significantly different. We're going to post this interview on our website, yourpersonalbank.com. I'm going to encourage you to check it out, read it, pass it on to others. It's very interesting and eye-opening because the other point they get into, and I was starting to touch on, is the interviewer asked, what about the recent stock market surge? Given all these things that are going on with the economy, it seems like why is there a dichotomy there? And as their point is, they think there's a lot of resilience because, as they put it, there's a lot of faith in the Federal Reserve stimulus. It's broad, and the expectations we're going to have this nice V-shaped recovery and life's going to return back to normal. And their statement is they think it's unlikely to be V-shaped. And, like they say, the true fall in GDP, it's probably more than what's officially recorded, okay? And what about a second wave? Is that going to occur? And what about world trade has dropped significantly? All these kinds of things. And their point is the average post-war financial crisis before 08-09, the average was 4 years of recovery. Their prediction is on this one, they feel like a good outcome would be a 5-year recovery. Okay? 5 years to recover. If that's the case, and they also say we're not certain, but that's what their thinking is. These are some of the top experts in their field. I hope they're wrong. I truly do, for everyone's sake. I think they probably would say the same thing if you asked them. But the point we need to think about is, what if they're right? I think the possibility of them being right is significant. Certainly they could be wrong. Are you prepared to take that risk? I guess that's really what it boils down to, is that's where the question comes down to is that a risk you're willing to take? If you've got monies that you're investing, in whatever market it is, I don't care if it's real estate or the stock market or cryptocurrency or anything else for that matter, are you willing and prepared to take that risk? Particularly on money that at some point you're going to need. What if you need that money in the short term for retirement or an emergency? Or what if you're building it for a future retirement? How long is it going to be before you need that money? We don't know what's going to happen. My point is simple. Why not take a look at an alternative of putting it into reallocating some of those dollars into something safer, something with less risk, something with some guarantees and some certainty about the results of what's going to happen going forward? What's the worst that could happen? If you reallocated a portion of your dollars that way, and these economists are wrong, and we do get the nice V-shaped recovery, and everything works out great. What's the worst case scenario? Maybe you didn't capture all of the gains because you didn't have all of your assets or funds allocated to that, to capture that. You still capture a good portion, depending on how you allocate it, of course. But what's the alternative? What if they're right? What if the markets happen to be wrong and they're right? And there's a lot of other people out there that think they may be right. We don't know. My point is real simple. If they're right and you've reallocated some money so that you can ensure that your future is taken care of, you've guaranteed some returns, you've guaranteed that you'll have money to supplement your retirement or take care of expenses or whatever those things may be, whether it's you personally, your business, or whatever that may be, that allows a lot of people to sleep at night. Reducing that risk reduces financial stress. I've talked about that many times. Stress is one of the worst things. Doctors talk about reducing stress all the time. Number one cause of disease, right? Number one cause of divorce is financial problems, okay? What is that stress and reduction of that stress? What is that worth? Is it worth it to you? It really comes down to, it's a question of how do you want to live your life? I'm not against please understand, I'm not against taking on some risks. I'm an entrepreneur. I'm a business owner. I've taken on calculated risks most of my adult life. The thing is, I've had wins, successes in that, have had losses. I can tell you it's very stressful. I'm sure many of you could share similar stories. I said in the previous segment, I'm an optimist with battle scars. I've had some battles, learned some lessons from it. The question you really have to ask yourself, and study after study shows that, we're human nature, something, if you ask, I think I saw one study, it said if you ask folks, if you get 8% up versus, you lose 8% a year, or you can get 4% guarantee, you can go up, your account could go up, but you could lose up to 8% in any given year, or would you rather have a 4% consistent, steady return? Upwards of 80% prefer the consistent, steady return. It's interesting. But yet when you look at most people's financial picture, if you will, they're at far more risk at where they're truly comfortable at in terms of a stress situation. If you move some of your, reallocate some of those funds to a safer option, like the personal bank, like I talk about, it's not the only option out there, but I talk about it so often because so often, overwhelmingly, I find people out of balance in terms of where they really want to be. When you really talk to them and really ask questions and get to talk to them, get to know them, I find they are not comfortable and they feel better when they're at a less risk position, but getting a nice, steady return on their money. That's the thing I'm talking about. And we're living in a time now with unprecedented uncertainty. That's the time to take a look at, where am I really at? Do I keep doing what I've always done, or do I reconsider? This is a time to really reconsider, like these Harvard economic professors are talking about. This time really is different. And I like one of their statements on here, and I thought this was really well put. And one of them stated, asking about, what they think is going to happen and the short and long-term results of all this. And he referred to the Wizard of Oz, where talking about Dorothy, where she was sucked up in the tornado in her house and it's spinning around and you don't know where it's going to come down. And he says, there's just a lot of uncertainty. And he finished off saying it's probably not in the pro-growth direction. The reality is, right now we're still in that tornado with Dorothy, aren't we? The house is spinning around. Where is it going to land? Is it going to land in a really great place and we're going to end up with a great economy and great results and get back to normal? Gosh, I hope so. But I can't say for certain that's what's going to happen. Is it going to be something worse or something in the middle? Again, we just don't know. So again, put yourself in a position where you've reduced some of that risk. You've reduced the impact, the financial impact of wherever the house lands. Whatever's going to happen, you'll be okay. And that will reduce stress. Stay tuned for the last segment. We're going to talk a little bit more about that and show you how to reduce the financial stress while we're in this tornado.
For more information on your personal bank, call Ference at 866-515-6280 or online at yourpersonalbank.com. Back to your personal bank show with president and founder of Secure Estate Management, Ferenc Toth.
All right, we're rounding third, and we're going to finish this up. But I'll tell you what, we've been covering a lot of great stuff, and I've been talking about this particular interview. These two Harvard economic professors, Carmen Reinhart and Kenneth Rogoff. This is a really great interview. We're going to post it on yourpersonalbank.com. I highly encourage you to go there, check it out. Download it, pass it on to others. But they're the authors of a book that was written in 2009 that was titled "This Time is Different: 8 Centuries of Financial Folly." And what the premise of the book and what they did is they talked about how the 08-09 credit crunch was actually part of, it wasn't unique, it's part of a regular economic financial cycle. So the interviewer asked them, okay, we're dealing with this coronavirus situation. Is it different this time? And both agreed it is. They agreed for several reasons why it's different. Of course, it being a pandemic-caused event, those don't happen very often. They talked about how, the markets seem to be at odds with what's going on. They're talking about unemployment. I've mentioned how the banking industry and the lending limits, the crediting standards are tightening up. Folks with good credit, decent credit, who used to be able to get loans are having struggling to get them now. In fact, I talked to a mortgage broker just a couple of days ago where he said jumbo loans are almost a thing of the past right now. You just about can't get one anywhere. So it's one of those things where the situation is definitely different than what we're used to. It's not a financial event, and I think that's part of the reason behind it. It's a medical event. And how does this all affect your money? And I really, really like this analogy that they used. And this has been echoed by many people, but I love this analogy where they said it's like in The Wizard of Oz when Dorothy, was taken up in the tornado. She was spinning around in the tornado in the house. Dorothy had no idea where it was going to land, did she? And his point is simple. That's exactly where we are right now. No one really knows where this is all going to land. Where is this all going to end up? How's it going to, what's the result going to be? How's it going to affect our money? What kind of economy are we going to have? Is it going to be, what kind of recovery are we going to have from it? How bad is it going to get? How long is it going to last? I've been talking about that for the last couple of months now. And, the Oracle of Omaha himself, Warren Buffett, said just a couple weeks ago or so at his stockholder meeting, I don't think anybody really knows where this is going to go, what's going to happen. And I don't know if there's anybody with more experience than him. So if you have money and monies that you are investing for the future, and you're going to need those monies at some point, whether it be maybe now income or near term, or maybe down the road, the question you need to ask yourself, and this is a tough question, we can certainly help you do that, but are you willing or prepared to risk those monies or not? I'm not saying don't put money at risk. I've said this many times, and I'm an entrepreneur. Of course, I've put money at risk many times over my lifetime, over my business career. Okay, I've taken risk on. I've invested in the markets. I've done real estate markets. I've done in the stock market. I've done those things personally. Okay, at different times. But as I've said it many times on the show, I'm an optimist with battle scars. In other words, there's so much uncertainty and unknowns right now, and everyone's repeating it pretty much. We don't know. It doesn't seem to me that, at least for myself personally, it makes a lot of sense to put some of those dollars at risk. Your situation may be different. I understand that. That's something that we can discuss. I'd be happy to discuss with you. But I would encourage you to contact us at yourpersonalbank.com. Let's have that discussion. Let's see if maybe you haven't gotten the rest of the story, as Paul Harvey used to like to say. Maybe you haven't been introduced to I'm not just saying Your Personal Bank. That's a great tool that we use to reduce market risk, create some certainty or consistent returns, get some tax benefits. There's a lot of benefits there. But there's other financial tools we use also. And why I focus so strongly, I'd love to put everybody just in a growth position and let them grow and all that great stuff. That'd be awesome. The problem I run into is the vast majority of the time, in good conscience, I can't do that, because I find when I sit down and talk to people and ask them real questions about them and their goals and what they want to accomplish, I find in most cases they're far more at risk than they're comfortable being. And so we've got to help them balance that out. And we'll give them some of the best tools available to get that middle bucket, that consistent, steady, eddy, interest, cash flow bucket. Make sure that's full and robust so they can have the certainty of going forward knowing that they're going to get the results they want to get. And then I always just say, look, lock down what you know you're going to need, and then if you want to play with the rest, go for it. You've got more. You're in a better financial position, and I know it's the opposite. It goes against the grain of what we tend to hear out there from the media, and everybody's focusing on growth and growth and growth. I mean, that's what we hear all the time. It's like a mantra. It's almost like the drums beating. And I know I'm going against the grain on that. But again, I sleep at night when I know that I've helped a client or helped an individual get in a better position where I've helped them reduce their financial stress in their life. And there's many, many clients I've worked with over the decades, literally, and this is my 23rd year, who have had great results as a result and their life is better, not because it's not all about how much you make or how much return you get in life. That's not, yes, those things are important, but there's other things in life that are many times more important than what return you get on your money. And I know I'm preaching to the choir. This is Money Radio, right? The thing is, what's your stress level? What's your financial stress level? What's your life? What's your life really like? Those are some of the things. It's almost my wife's a counselor, postmaster's degree. She's been with me on many, many meetings with clients and prospective clients. And it's funny how will walk away and she'll often say, "You did more counseling than you did talking about products." I said, yeah, I had to help people find out what they really want in life. And at a time right now, and I just want to finish up with this thought, at a time in our lives that's certainly different than we've ever experienced before, unprecedented, uncertainty, we really don't know where this house is going to land. Like in Dorothy, Wizard of Oz, we don't know what's going to happen. That's a time when you pull in the reins, you tighten up the belt, and you lock her down and you say, look, I'm going to save and protect some of this to weather this storm. It's like battening down the hatches when a hurricane hits. Those in hurricane areas know what I'm talking about. It's time to batten down the hatches and ride this sucker out, right? Let's see what's going to happen. And by the way, the very, very, very last thought is if you do tighten down or lock down some of your money, I'm not saying completely get out of risk. I'm just saying lock some of it down, more than you normally would, probably in a normal economic situation. But if you do that, when this is all over, whenever that is, may be, you will be in a better financial position, stronger, because that money is still there. It hasn't lost value. In fact, it continued to grow throughout whatever period of time that was, because it's safer. It has some guarantees. It's there. We can get some consistent growth on it. And then, again, when everything is done and the sun starts to shine, the clouds dissipate, and we come into a nicer, more relative, calm, regular time, opportunities will be there that you can take advantage of. And I'd love to be there to help you do that. Stay tuned to contact us at yourpersonalbank.com, and we will see you again next week.
Listen next week at noon for more information on Your Personal Bank. Contact Ference at 866-515-6280 or online at yourpersonalbank.com.
This show is designed to provide accurate and authoritative information. The presenter and guests on this program do not engage in rendering legal, accounting, or tax advice. Expert advice from a professional involving your specific situation should be sought, if required. Permanent life insurance is a long-term investment. Products, optional features, and riders may have limitations, restrictions, and additional charges and may not be available in all states. Withdrawals beyond principal may be taxable income. Excessive and unpaid loans may cause the policy to lapse. If a policy lapses, unpaid loans are treated as distributions for tax purposes. Replacements may not be suitable for everyone. There may be penalties and surrender charges when replacing coverage. New products may include new surrender charges and contestability period. Policy guarantees are based upon the claims-paying ability of issuing insurance company and do not apply to the investment performance or assets in the underlying variable portfolios. The life insurance and annuity products in this presentation are not FDIC insured, may lose value, and are not bank guaranteed.